Hi guys, welcome back. Wow, that is another day of bloodbath today. The market just gapped down and started to sell off from the opening all the way to closing. No rebound in the middle. Just when most people got some hope with 2 days of great rebound with gap up and everything, you know, the Green Day effect, and then right away it gave you a super red candlestick to put off the hope. Seems like the sell-off is not over yet. Just like what I said in the last video on Tuesday, the fact that we are in fear level doesn't mean it's a good time to buy, because it only works in the bull market, and right now we're out of the bull market. At least it's on a pause. Too early to call bear market, but for sure out of the bull market trend. So to buy in every dip with the fear level indicator, it's like selling at the greed level when it's in a bull market. You might always end up selling too early in the middle of a run up. So right now buying in fear mode is kind of like risking to buy in the middle of a run down. So it looks like this week is another terrible week for the market, but at least for us, it's another week of great profit, right? So that is what I share on Monday for the trade of the week. And with the 3 selections of the trade this week, you can see that I was pretty much bearish on the market this week, which is why the trade I suggest for this week was gold, the triple leverage gold, which is why the 3 trades for this week was triple leverage of gold, a put option on Nvidia, and shorting the Nasdaq SQQQ and UVXY, the fear or volatility index. And so far this is giving us great profit for the week when the market is selling off like a bloodbath. So first, GDXU had given us great profit when I called out to open the position on Monday and add the dip on Tuesday at 10.4. So far, we have had a 30% run up in just a few days. So that is pretty good. The only thing regretful is selling a bit early this morning. But if you're not greedy, I think it's good profit to take. For gold, I think it's not over yet, but it has already reached my first target, right? So for the medium term, I leave the second target blank because I want to look at the future of gold. So for the future of gold, I have the first target price of 1900, which has been met already today. But in the medium term, I think it's not over yet. For medium to longer term target, I think we can aim at the around 2000 level. But I anticipate that there might be some pullback, so maybe there is chance to buy again if it gives the chance. But because GDXU is a triple leverage, so it has more time cost. But if I have the GLD, I think I would be more comfortable and just hold it through because it doesn't have any leverage. But it also means it would be much less volatile, less up, less down. The second suggestion was Nvidia put, because I anticipated that there would be a run-up before the earning and maybe sell the news after the earning, because we all knew that Nvidia would have a super good earning, which is why it had a great run-up last year, right? But I also think that there would be the sell the news action, so I suggested the put option on Nvidia. But option is more risky and it has the time cost. So another option would be buying the ETF to short the whole chip sector, which is ticker symbol SOXS, which is the complete opposite of SOXL. If you remember, we have made great profit with SOXL 2 weeks ago. The run up of all the way from 34 to 49, almost 50%. And then we can also take advantage of the rundown to buy SOXS. And then the last suggestion was the UVXY and SQQQ. Today it was up 17%. Again, very, very good profit when we are in a painful market. The first intention was to be a hedge against the long position, the long-term portfolio. So then even when things drop, there would be something else that can give a hedge and insurance and make us feel better. If it goes down, then fine. That means our long-term position would be up. And if it goes up, that means great. We can take profit and use the money to buy the dip of our long positions. So that is the point of the hedge or insurance, I call it. And same thing with SQQQ, also up near 9% today, which is not bad as well. So like I said on Tuesday's video, one day war, one day no war, and then today there's war again, right? So the market sell off pretty badly because there was a bomb incident happening, and Biden says the risk of Russia invasion is very high. If you remember, on Tuesday, it was the news of no war after all, so the market had gapped up and continued running up from morning to closing. And so many people thought that it's a V-shaped recovery or W-shaped recovery, so it's time to buy the dip. So I said on Tuesday, then if that is really the case, then how come gold had a big run up last Friday because of the news on war, but it did not fall back to the price before the breakout? And another indicator was the VIX to have a big run up for the news, but it did not fall back down to the level before the news. So it seems like the money is still fearful and there should be the use of gold, which is why I took advantage of the backtest of gold. Right? So far, not trusting the market or the news actually kind of pays off. Like I said, I don't trust the news right now. I only trust the technical analysis. What it's telling me, what it indicates, what the smart money is doing, that's more important than the news. But even so, with that said, I also need to remind you that we cannot be too greedy shorting the market. To short the market, the biggest danger is to not know when to stop, not know when to take profit and then turn profit into loss. Because when you're at loss for shorting the market, it may never come back because market always goes up with time. So let's say if tomorrow or within the next 1 to 2 days, something happen, news driven, and make UVXY jump up to, let's say, the 18 or 19 level, I think it is a good time to take profit, and also might be a good time to catch the dip of the long positions, or even just catch some nice rebound from the falling knives. And what to buy, I'll give you examples. Right now, the number one stock I'm looking at is the Shopify, ticker symbol SHOP. Not only it is one of the best stock for Canadian companies. As you know, I'm Canadian, so of course I like Canadian companies, right? So it's not just that, but also that Shopify. It's a good company, high growth. Still, even though it had a very bad sell-off after the earning yesterday, I do think this might be a good opportunity. Last time I criticized it was too overvalued, and now that it has come back down quite a lot, maybe it's time to revisit, right? Tomorrow, if there's another day of dipping, I think we should take advantage of the dip and buy it as a long-term position, okay? Let's not be too fearful right now with the growth stocks or tech stocks. So that is my number one choice, to buy the dip or catching a falling knife. And number two is Square, ticker symbol SQ. I remember a lot of people asked me if it's good time to buy the dip back then, be above $200, but now it is another 50% off since $200. So if tomorrow there is another day of dipping to make a new low, maybe it's time to revisit somewhere between 90 to 100. I think the fintech sector has been selling off quite enough, maybe more than enough. I would say the valuation is got to be the fair zone. I was hesitating, thinking between PayPal and Square, and I think both are good choices. You know, both PayPal and Square have been making profit, so then they should be able to survive with a year or micro trend of reducing the QE or increasing interest rate, because they are making profit even though the PE is not very low. But between Square and PayPal, I would say PayPal is a safer choice. It's a bigger company, the PE is a lot lower than Square, but it's also slower growth. So I would say maybe PayPal is a choice for Warren Buffett and Square would be a choice for Cathie Wood. And for me, after giving a second thought, I would still choose Square more than PayPal. For one important reason is that founder is the CEO. This to me is almost my number one principle right now in this market. I'll explain more about this later, but just remember that my rule of picking stocks right now, very importantly, the founders needs to be the CEO. The CEO is the founder. So for me, it is still Square for the fintech sector. So if tomorrow or next day, it gives the price range of between 90 to 100, I will take advantage of the dip. maybe also with some leaps, call options. So that is the US and Canadian stocks. Now Chinese stocks, like I have been saying, CWEB and KWEB take advantage of every black swan news, every bad news to catch the good dip. Accumulate the shares in 2022 because I do think they have formed a nice bottom already. This time it looks solid. It's a very beautiful round shaped bottom. So from now on, I would take advantage of every bad news to catch on the dip. And this time I would think it's for longer term. If you don't want to swing trade it, even though there is more black swan news coming, and this bottom may not be the absolute bottom, the end of January, but I would say really not far. So closer to the bottom price, the better. Take advantage of bad news. Another good sign I said on Tuesday was that the Chinese stocks had began to strengthen and spread it out to more smaller to medium caps. So it's not just the big techs that's rebounding. It's stretching to more growth stocks like Futu, for example. It has not been making lower lows for a while. The bottom was in December, even though KWEB has made a new low on this day, end of January. So that is good sign. And also PDD, you know that I really like PDD and I always monitor whether there is good dip to catch. So I really want to have more bad news to drive down the price of PDD so I can buy and hold for the long term. And another one to share is DD, ticker symbol DIDI. I know a lot of you know this already and might have forgotten a little bit after the delisting news. I think it has been very quiet for a while already, so maybe it's time to revisit. Because if we still remember, it's getting the second listing in Hong Kong in March, which is next month, coming soon. So that would be a short-term catalyst. I expect DD to be removed from Nasdaq and get to the OTC. So then most of the international investors don't have to sell it out and move it to Hong Kong, but might be able to trade the OTC stock, like Tencent, with the ticker TCEHY, and also Meituan with the ticker MPNGY. So maybe something similar would be for DD as well, which is the more optimistic scenario. So then we might be able to keep the shares in US, just like Luckin Coffee, right? So after all the bad news and the fuss to be behind us, I do expect DD to recover. Maybe somewhere in this year, 2022. Let's see about that. The only thing that's not good is that it doesn't have a PE. It's not making profit yet compared to the other ones like Baidu, Baba, Futu, and PDD I just said. DD is not making profit yet. So that is the biggest risk. So I guess when it comes to the stock that is still at loss, we need to control the positions for this year. Now for Xiaopeng and NIO, I know a lot of you would want me to share that. There is good news as well, is that it's not making lower lows since the end of January. It is a bit far away from that low also. So that is a good sign, even though S&P 500 is almost touching the low of January. Xiaopeng and NIO has been holding well, especially Xiaopeng. You can clearly see this uptrend line. As long as it's not broken, I guess it's still safe to hold right now, unless this trend line gets broken. Now for EV, the spring season is kind of a low season, so that might explain why the EV sector has been lagging when you take a look at Tesla. But compared to Tesla, I think Xiaopeng and Li Auto has been outperforming the EV sector. At the same time, one good reason is that I think Xiaopeng and Li Auto would have a good Q4 earning report and 2021 earning. While for NIO, maybe the earning is not so great. But if the earning drive the share price down, that might be a good dip to catch at the same time, right? Let's see. Now that's it for today, and if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.